All right, everybody. 3 reasons why Ethereum price is still on track to top $2,000. I know you guys are all excited about Ethereum, so let's kick into this one here. Substantial spot volume and favorable futures premium and top traders buying the dip are all signals that Ethereum price should see continuation. What is going on, everybody? Welcome back to the channel. Hope you guys are having a great kickoff to your week this week. I am winning and so are you. Today we're going to talk about Ethereum and why Ethereum is on its way to more all-time highs, which is fantastic. It just hit another all-time high, and why the mega whales are seeing mega movement in the future for Ethereum. So here we go. After dropping 27% over 3 days, ETH price finally reaches a bottom at 1,040 on January 22nd. The sharp correction liquidated $600 billion of future contracts, but interestingly, Ether price rebounded to a new all-time high, even as Bitcoin price continues to trade in a slight downtrend. According to Cointelegraph, the increasing TVL and transaction volumes of the decentralized finance sector are behind Ether's impressive surge. To determine whether the recent pump reflects a potential local top, we'll take a closer look at on-chain flows and derivatives data. So let's take a look at this 4-hour chart. All right, so here on the 4-hour candlestick chart, you can see that Ethereum did hit its bottom down here at 1,040, but it had been on a continuous uptrend all the way up to 1475.76 right there before making its new little correction. We're going to see where that goes over the next day or two. Exchange withdrawals point to whale accumulation. Increasing withdrawals from exchanges can be caused by multiple factors, including staking, yield farming, and buyers sending coins to cold storage. Usually a steady flow of net deposits indicate willingness to sell in the short term. On the other hand, net withdrawals are generally related to periods of whale accumulation. As the above chart shows, on January 23rd, centralized exchanges recently reached their lowest Ether reserve levels since November of 2018. And we discussed that on my previous video called Ethereum is sold out. So check that video out. Although there is some discussion whether part of this Ether exodus is an internal transfer between Bitfinex cold wallets, there has been a clear net withdrawal trend over the past month. Despite these rumors, the data points towards accumulation. This data also coincides with the DeFi's total value locked TVL reaching a $26 billion all-time high, and signals investors chose to take advantage of the lucrative yield opportunities that exist outside of centralized exchanges. So what this is talking about here, let's take a look at this chart. This chart shows you that the price is in the black line. You can see it kept going up and down, right? So just like what price always does, it goes up and it corrects and it goes up and it corrects. But this line here, this red line, is the reserve currency at the actual exchanges. As you can see, there was tons and tons of currency there. People started buying and buying and buying and buying and buying and buying. And at that point, people were still leaving their coins on the exchanges. But when it started reaching these new all-time highs, people started storing them in their pockets. They were actually taking them off of the exchange and putting it in their hard wallet, whether it was on their computer or they're putting it on their flash drives, which you can get, and storing their actual cryptocurrency offline. And you can see here it went down. When there's tons and tons of currency on the exchanges, that means a lot of people are selling. So this is a really good sign that the whales have bought a bunch of Ethereum and they're just stashing it away for another day. Futures were overbought as well. So by measuring the expense gap between futures and the regular spot market, a trader can gauge the level of bullishness in the market. The 3-month future should usually trade between 6% to 20% annualized premium basis versus regular spot exchanges. Whenever this indicator fades or turns negative, this is an alarming red flag. This situation is known as backwardation and indicates that the market is turning bearish. On the other hand, a sustainable basis above 20% signals excessive leverage from buyers, creating the potential of massive liquidations and eventual market crashes. The above chart shows that the premium peaked at 6.5% on January 19th, equaled to a 38% annualized rate. This level is considered extremely overbought as traders needed an even higher price increase ahead of expiration to profit from it. Overbought derivatives levels should be considered a yellow flag, although maintaining them for a short period is normal. Traders might momentarily exceed their regular leverage during the rally and later purchase the underlying asset, Ether, to adjust the risk. One way or another, the market adjusted itself during the Ether price crash, and the futures premium currently stands at a healthy 4.5% level or 28% annualized. So let's take a look at that chart. Okay, so here you can see what they're talking about. It went all the way up here on January 19th, and that is extremely overbought territory. And because of that, people got freaked out. People were over leveraged, and bam, the price just tanked for those couple of days. It went all the way down here to below 2.5%, which is extremely low. So people got back in the market, and now you can see that they're pretty much hovering at that 4.5% mark, which is the confident level there. Spot volume remains strong and traders bought the dip. In addition to monitoring futures contracts, profitable traders also track volume in the spot market. Typically, low volumes indicate the lack of confidence because a lot of people are not buying, right? Therefore, significant price increases should be accompanied by robust trading activity. So as price is going up, there should be a lot more people buying on the exchanges. Over the past week, Ether has averaged $6.1 billion in daily volume. And while this figure is far from the $12.3 billion all-time high seen on January 11th, it is still 240% higher than December's. Therefore, the activity supporting the recent 1,477 all-time high is a positive indicator. Exchange-provided data highlights traders' long to short net positioning by analyzing every client's position on the spot, perpetual, and futures contracts. One can obtain a clearer view whether professional traders are leaning bullish or bearish. So with that said, there are occasional discrepancies in the methodologies between different exchanges, so viewers should monitor changes instead of absolute figures. So let's take a look at this chart. So as you can see here, this is the volume chart, and this was January 14th. The price kept running up, tons of volume coming in, tons of people buying. And then, of course, the day right behind the all-time high there started to peak out, right? So tons of volume came in, so the price started going up. And then, of course, the volume started taking a little bit of a break there because people were like, well, that's too much. I don't want to buy it at that price. And the volume did start to taper off. But volume is continuing to pour in now, which is great, indicating that there is a future run still on the table. So $2,000 is definitely in the future. The top traders index at Binance and Huobi have held roughly the same Ether positions over the past couple of days. Huobi's average over the past 30 days has averaged a 0.83 long to short ratio, while the Binance traders held a 0.94 average. The current reading is 0.85, indicates a slight negative sentiment. OKX stands out as the top traders' long to short ratio peaked at 2.0, strongly favoring longs in the early hours of January 22nd, but it decreased until January 24th and finally bottomed out at 1.05. The strong net selling trend was reverted today as traders bought the dip and the indicators flipped to a 1.17 in favor of longs. One should keep in mind that the arbitrage desks and market makers encompass a vast portion of the exchange's top traders metric. The unusually high futures premium would incentivize those clients to create short positions in futures contracts while simultaneously buying Ether spot positions. Considering Ether's on-chain data indicating whales hoarding, along with the healthy futures contracts premium, the market structure seems reliable. The fact that the top traders at OKX also bought today's dip is further indication that the rally should be in continuation. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph. Every investment and trading move involves risk. You should conduct your own research when making a decision. And let's check the chart on that last piece of information there. So these are the different exchanges. As you can see here, you got Binance, and then here you got Huobi, and then here you got OKX. And as you can see, the green is indication of long trades, people holding long positions. Red is the short positions, and you can see the line here indicates where the sentiment is. And the sentiment for the last couple of days here has been a little bit shorter after it hit that new all-time high over here as well. And then of course, this is the OKX one, which had the highest number, which was the 0.18. All right. So hope you guys enjoyed this video. Don't forget to like and subscribe to the channel. I'm super thankful for all of you guys. It has been a great run. We are now over 500 followers, 500 subs, dude. Thank you so much. I'm so freaking pumped for this. Like, you have no idea. Next stop is 1,000. And then after that, my future market, what I see is 1111. I love that number, and I love you guys. Thank you so much for watching and supporting the channel. Don't forget to like and subscribe. Share it with your friends too. I'd appreciate that. Talk to you guys later.